Good morning, everyone, and welcome to the pre-market session for Friday, September the 12th, 2014. My name is Doug McKay. I am the head moderator and founder of this little group. We are a self-organized learning environment. We come together each day in a chat room. It's a Skype room. If you're interested in checking it out, you can send me a contact request to Doug_McKay. I'll be the one from Windsor, Ontario, Canada. Of course, you can send me an email to my email address at d.mckay@stealthtrader.com if you have any questions or you just want to talk about the market. Each day we come together inside of this live session, and I go through my analysis. I start with the macro to the micro. Always want to know where we are within the the different time frames, and then we get into some more in-depth volume profile analysis, and I look at the trade levels that I'm looking at for the day, my hypotheses, and what my targets and trade levels will be. But before I do anything, I've got to get the disclaimer out of the way. This information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions made. Trading futures or any instrument involves risk or loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than their initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in here are for education purposes only. Please do your own due diligence, trade your own trade plan. So a couple things, let's just get the news out of the way here. So let me just bring up Forex Factory. Howard is going to be on the way home from Seattle this weekend, so we'll be back to regular, hopefully, next week with our regular homework sheet and our QLTP. There's a couple of new things coming with the QLTP. We're expanding it. We're going to be having our hypotheses on the QLTP as well as our trade levels and targets on those sheets, and they'll be both for the Russell and the ES. So thank goodness that Howard is on his way home. But so far today we had core retail sales, and import prices. Haven't really looked at what exactly the market reacted to it, but we'll take a look at that in real time here. Of course, the big news coming up is going to be your University of Michigan consumer sentiment and your inflation expectations, and then 5 minutes later, your business inventories. These times are in Eastern time, so within the first half hour, we've got three key news announcements. Let's just go take a look at where we are. We're currently trading 1987. We're basically right in balance. Now remember, we've rolled over. So everything I talk about is going to be for the December contracts. That's the Z contract, and we'll be talking about that on the Russell and on the gold and on the ES. So if you haven't rolled over yet, you might want to look to do it tomorrow. There's still enough liquidity in both contracts, so it's fine if you're trading the September contract, but everything we do in here is going to be December. So let's take a look at the macro to the micro. You can see that this is the continuous contract. When I'm looking at the big picture, I'm always going back to the continuous contract. You can see that the trend is very much intact on the monthly. We've got good slope, good separation, trading in the upward distribution. Now, of course, there's an adjustment in the highs, and I'm going to talk about that a little bit later on when I get into the composite chart. But I just want to look to see where we are in our trends, see if we have any trend violations. You can see that the weekly is still very much intact as well. It came down. We didn't quite close the technical gap yet on the weekly, but we come close. A lot of times in the larger time frames, if we get within a point or so, I'll consider it to be closed, but technically it's not closed yet, but we're likely to close it going into next week, even just through time itself. But overall, the trend is still intact. We got good slope, good separation, so we are trending still on the weekly. On the daily, we've come up and we've consolidated. We're just in a consolidation mode In fact, it looks like there's going to be a little bit of a descending wedge here, or a little bit of a bull flag. I'll take a look at that and then post a chart later. But overall, we're coming up into an MA squeeze and an MA hug right here between the 9 EMA and the 20 SMA, and we're trying to hold the 20 SMA. So we're seeing a little bit of weakness, but we have not violated the trend. So the trend still is intact. We could very easily get the MA squeeze, MA hug, and then bounce off. But the key point right here is when you get the 9 and the 20 diverging here and coming into what I call a MA hug, it is a decision point. We've been talking about the fact that we've been coiling and that we're likely to get a bigger move outside of this balance, and I still think that's the case, and this is one of the first indications that I look for. The key here is you don't know which direction, so don't put your bias hat on yet. Wait for them to give you clues on the smaller time frames. Let's just take a look at the geometric chart. There's 3 forks on this chart. The longer term upward sloping fork is this, I believe it's red. I'm colorblind, so red. Then we've got, like, I think cyan is the intermediate upward sloping fork. It's been very, very tough lately finding an opposing downward sloping fork. But I found one that I think works, has good frequency. I did it on the 4-hour. And using the 2011 as our A point, and then a couple of swing lows. It looks better on the 4-hour than it does on the daily, but I want to always show it on the daily. So the key here is we're back inside the lower channel and the lower line of the longer term upward sloping fork. And we're still trading within the upper channel of the middle in term or shorter time frame upward sloping fork, and we're trying to hold above the center line of the opposing downward sloping fork. Now we do have an energy point that comes up at that 1993 area, 1992.75, 1993. So write that down, and it's showing that that is scheduled to hit around the 16th. So sometime next week. What is that, Tuesday? I think that's Tuesday. So we'll just keep an eye on that. But for today, the key level right now is this 1994. If we get below the 1994, we're likely going to come down and test the lower line of the longer term upward sloping fork again, and that'll bring us down into the 1990.75 area. If we can hold here and get a bit of a rally, a target that you might want to write down would be up here at the 2003.75 area. Other than that, there's not much information that we can glean from the fork for today. So let's go take a look at the shorter time frame, see if we've got any trends coming into the RTH and the intraday time frames. You can see that we've got, there was a really nice technical gap right here on the 4-hour with that move up late in the afternoon yesterday, and then in the evening, in the Globex, we've come down and closed that technical gap. There is a naked cross here at 1993.50, so I'd write that down on your journal. If we can't hold the 9 EMA, I'd be looking to come down and take out this naked cross here on the 4-hour. But the overall trend is there is no trend on the 4-hour. We're consolidating sideways. Going down to the 30-minute, a little bit of a same story. A little bit of weakness coming in. We're trading below the 9 and the 20. We actually rejected right off of the 20 SMA. This is obviously news, reaction to the news. No real slope or separation, but it could be the start of a trend down. So we have violated, and we came up and had this technical gap here, and then closed it out through time and price, and then just went sideways, and now we're seeing some weakness coming in. Going down to the 5-minute, 5 minutes, a little bit of a different story. We are seeing a bit of a trend start here. A little bit of a technical gap, but not much. A tech gap close will probably be in around that 1995 50 area, but we do have a bit of a downtrend starting. So watch how they react off of this 9 EMA. If they get above the 9 EMA, then I'd be looking for a move back up towards the 20 in that 1996.50 area. So let's go take a look at the big picture. You can see that the structure of the market doesn't change. You know, all the numbers change with the rollover, and we had an 8-point delta between the September and the December contract. We're currently, you know, and I'm sorry, I forgot to switch my contract on. Yeah, I just realized that. I'm on the continuous chart, by the way. Not the continuous hasn't rolled over yet. On the let's just go there. Oops. You see, the trend's not going to matter because whether I'm on the continuous, or if I'm on the September, or I'm on the December, the actual trends are still going to show up the same. It's just going to show up different numbers. So we come up and we close the gap on the 5-minute, move up to the 20 SMA is going to bring us up into the 1988.50. But we won't go back through the trends because the trends are still the same, just the numbers are going to be a little bit different there. So let's look at it on the composite because I'd rather look at it anyway. I mean, I really only keep the moving averages to give me an idea of strength of trends and violations of trends. So the numbers really are more important on the composite and the volume profile. So the key here is going back all the way to 0825. We've been in balance here. The microcomposite VPOC is right here at 1987.50. We've got our naked close from yesterday at 1989. There's a little bit of an LVN at 1988.50, but right now we're in balance. What I want to do is I want to draw a profile in here and see where we found in the last 3 days, see if where they found value. So really, value really hasn't changed. 3-day microcomposite, even though we've come down into the 73.70 area, which was a former microcomposite. This microcomposite that was where they tried to hold value after going up and making that swing high. This 1977.75 was, remember, that 1985.75. And it's been shifted down on the contract rollover. But the key point is they came down to a former point where they tried to hold value and they picked up buyers and they rotated back up into this balance itself. So, you know, the key levels on the big picture that you want to pay attention to here, you know, we're likely to chop around in this area. We've got, you know, basically a couple CHVNs, and we tried to hold value a little bit higher after going and making the all-time adjusted high at on the RTH at 2002. So your 2010 on the September contract adjusted down to 2002, and then we tried to hold value here around 1992, which was that 2000 area. On the September contract is adjusted down to 92, and in this area I'm expecting to play some ping pong back and forth between this 92 and this 87.50. It's really when we get down, if we come down to this 93.75, 93.50 area, you've got the value area low of the longer term microcomposite as well as a CLV. So for me, that's going to be the level and the line in the sand that we need to hold today. Because if we don't hold that level, we're likely to come down to that 1981.25, you know, which was where we accepted value after we broke out of the longer term microcomposite and value area. So you can see that we chopped around in this area, and the overall microcomposite going all the way back to that 0527 breakout. The value area high was 1978.75. It's been adjusted down basically to 1971, and if we can't hold above this 1983, we're likely to come down to where they accepted the value just after the breakout, which is this level right here at 1981 and a quarter. So if we break below 83.50, I think you've got a pretty good short into that 81 and a quarter, and continuation to test the lower side of this balance down at 1980.25. If we get below there, then you've got the prior value area high from the September contract at 1978.75. It is a CHVN still, and the value area low of the last 3 days at 1979 and a quarter. The key level below that is going to be the 76, because 76 will take us down to the 73.50. But I really think that any move down below this area right here, break below the range of the microcomposite at 73.50, I think the 72 is not going to hold this time. I think we're going to come down, and I've been looking at the distribution, the double distribution down here. It was the 71 and a quarter and 67 and a quarter. It has been adjusted down to 63 and a quarter and 59 and a quarter. And remember, 59 and a quarter is our microcomposite VPOC inside of value for the longer term microcomposite going back to that May 27th. So really below range, I think that they need to come down lower next time to pick up buyers with conviction, and I think it's going to be in this double distribution area down there. So let's take a look at the overnight, and just make sure that you note on your journal that 2002 is the adjusted all-time high for the RTH session on the December contract. 2010 is your all-time high in the RTH on the September contract. Going over to the Globex, I'm just going to bring this up for a minute so we can see it. Oops, didn't want to do that. The adjusted all-time high from that 2011 that was put in the Globex and is our all-time high at 2011 on the December contract has been adjusted to 2003. Just make sure you make notes on that, because I'm going to tell you why you want to pay attention to that in just a couple minutes. So let me go back over to the Globex and get our levels. Sorry, I just going to freeze up here for a minute. Come on. I got too much going on this. Come on. Sorry, I should have just told you rather than showing it, but I always prefer to do the visual. Now, for some reason, my IRT doesn't want to respond. Just want to pause the recording for a second. Sorry, gang, just... All right, so overnight, let me just get my intraday chart up. So far overnight, we have a overnight high at 91.50, and overnight low we have down at 1986.50. Come on. And then our current VPOC in the Globex is 1989 and a quarter. And we've got a pretty decent bell curve on the overnight composite. The close yesterday, or composite profile, the close from yesterday was 1989. We really have net neutral inventory overnight, a little bit net neutral to a little bit net negative, but I would look at it more neutral than negative. It's got a pretty nice bell curve. So let's take a look at how that plays out within the structure of yesterday. We're currently trading right now at 1988. It is just above the 1987.75 value area high and an LVN right here at 88. So this would be a trade area right here. I'd be looking for how they, if we open right here, coming into the RTH session, and they hold the value area and hold this LVN, I'd be looking for a move up to take out the naked close at 89 and come up and test this range high at 1989.75. This is going to be my first target above this 88. You can use, you know what, I'm going to use the 89 naked close as the first target. It's a little bit tight, but I'd be looking for continuation. I would just get in and get funded, buy that 89 and a quarter with the overnight VPOC right there. But I'd be looking for a push up into this 1990 to test the range high. Above 1990, then I'm looking for a continuation of the move up and a move to take out the overnight high. Right now we've got a pretty good setup in terms of the overnight low and overnight high probability. We're getting a little bit of weakness here even before we're now below the value area high. But if we break out of the 1990 and we haven't taken out the overnight low before then I think you got a really nice high probability trade to come up and take out this overnight high, which will be my first target above range and above value, and then a continuation up into this 1992. You can see that there's a LV, no, that's one I drew in there, skip that. There's an LVN right here. It's not a real strong LVN, sorry, CLVN at 1990. But it's right there at the range high, and that's why I like this trade. If we get above this, I think you're going to have a strong move. I think the buyers are going to assert themselves and try to take us up into that overnight high in that 1992. Remember, my main hypothesis, if we hold above 83.50, is to chop around in this area with an upward bias and play ping pong between this 92 and 87.50. So if we break out of this 1990, I think you got a nice trade into the 91.50 and 92. I'm looking for responsive buyers to step in at this 92 area. So I'm just going to put it just above here at the naked close. But if they don't step in at this 92 to 92.50 area, and you don't see, did I say responsive buyers, I meant responsive sellers. If they don't step in there, then look for the continuation to test the value area up here on the microcomposite at 1994. And that, again, is going to be a target and a trade area. Above 94, then I think we get continuation up, and I'd be looking for a move up to test this value area high where they tried to hold value up at the 1998. And that would be my first main target above that 94 level. I could draw it. And then at that point in time, I think that we go into price discovery, and I think we go up and test this 2002 level and take out the naked VPOC here at 2075. Above that, my first target is 2005 with resistance coming in. If you've noticed, I've left the levels up here because those levels were clearly defined in our September contract. Even though we're in December, the market's going to have memory. So those levels, and they're still going to be for the next several days, we're still going to have people trading both the September contract and the December contract. So these levels are all valid here. And I still anticipate if we break out of this 94 and can get above this 98, I still think we're going to go and equalize the high and take out that 2011 in the September contract with the December contract. I don't know when that's going to happen, but I have seen it many times in the past where once we roll over, they'll equalize the all-time high on the next contract. So all the levels up there, the 2005, the measured move to 2006.50, and then your 2010 and 2011, and there's measured moves to 17 and 23.50. And we will, they're on the September contract, but they're guidance that I have from where we traded for the last 3 months, or the contract we traded on for the last 3 months. If we get below and we can't hold above the value area high, obviously your first target is going to be that takeout of the overnight low at 86.50, and the key LVN for the day is going to be this 1986. So 1986 is, just above the IB high from yesterday. I'm sorry. Is it the IB high? Yes, IB high from yesterday. And then, if you're looking, if they can't hold the LVN, wait for them to get below the 1985 to get short. And then, of course, the move will be into the lower distribution and the VPOC from yesterday at 1984.75, which is going to bring you down to the VWAP from yesterday as well. So below 85.75, your first target is going to be that 84.75. And then I'd be looking for that continuation down to the value area low of the microcomposite, which also happens to be the 50% retracement, and the midpoint from yesterday. So that would be the next level below. And then if we get below the midpoint and we get below the CLVN, I'd be looking for an 80% rule to come into effect down here, and a destination trade down to the 81 1/4. And that 81.75, 81 1/4 area has been an important area on both the September contract and now the December contract. So that would be where I'd be looking for responsive buyers to step in. There's a little bit of an LVN right here at 1980.75. I'm just going to adjust it down a bit because I'm going to play this the same way I would play any slush zone. And when you've got confluence of numbers, you've got to be careful on how you play it. So I would not get long off of this until they hold above the LVN at 81.50 with a move back into balance from yesterday at 84. And I wouldn't get short until we break below the LVN below at 80 1/4, because remember 80 1/4 is also the CLVN. And at that point in time, then you've got the value area low from the 3-day microcomposite, the CHVN at 78.75, and the IB low from yesterday, all in that area. So that would be the next area that I look for, and I'm going to do it like I would any slush area, because I would not get long. Come on. I would not get long off of this until I'm above the 78. I wouldn't get short off of it until I'm below the 77. And then once we're down there, okay, the first area of responsiveness I'd be looking for is down at the 76 1/4, but I really don't think that that's going to hold. So I'm really not even going to pay attention to the 76. I'm really watching the 73.75 and 73.50 area, and that would be my main target, below range and below. I'm going to put it at 73.75, just front run these two, and this is where I look for the first responsive buyers to step in between the 73.50 and the 72.75 area, and that would be my first target below range and below value. And then, of course, what the area we need to hold is going to be the 72, and below 72, everything for me shifts down to this this value area high at 71, but I don't think that's going to hold. I really think at this point in time we're coming down, and I'm going to play it just like that, and I'm going to have my main target below down at 63.25. Remember, that used to be the 71 and a quarter, and then the 59.75, which is the big magnet down here, used to be that 67.25. And then the really nothing to hold us up. Once we get down here, we're likely to play ping pong down here, probably be watching for this 53 and a quarter area. And I don't think we're going to see much more, even if we get a big move, I don't think we're going to see much more than that today. So let's so that's what I'm looking at in terms of the levels for the ES. We're currently inside of that value range, so the probability is, and we still have time to go down and make a new overnight low. So just pay attention to that. If you see a new overnight low, let me know, and I'll make the adjustment as we move over to the other contracts. I just want to take a quick look at the Renko with Keltner and see how that is setting up for our levels. You can see that the Keltner center line is at 88 and a quarter, which is right here at the LVN in our main trade area for the open. So you can see if we get above that, a move up to test the upper Keltner is going to be all the way up there in that 94 area, which we've identified as well as area of possible responsive sellers stepping in. If we don't get above the Keltner center line, a move down to the lower Keltner is going to take us down where? Right into this 82 area down here. And by the time we get there, it's likely going to be closer to this this 81 and a quarter. So you can see how those line up. All right, let's take a quick look. What do we got for time here? 18. So we're going to go through this quickly. In fact, you know what? I'm just going to bring up my my overnight hypothesis that I put in the room earlier this morning, and just quickly review it for the Russell. This is on the December contract. We closed yesterday at 67.70 with a low at 52 and a high at 68.50. As I was writing this, we were trading in around 68.50, and 68.50 is really the level that I'm looking at on the Russell. The current balance in microcomposite is down at 66.20. So if we can't hold 68.50, look for a move down towards that 66.20. I'd look for a rotation down in that direction with the first target. What are we trading at on the Russell right now? Let me just take a quick look to know where we are. So we're already back down in that balance here. I'll just give you a quick look at the composite. You can see that the main microcomposite is right here at this 66.20, 66.30. So they've already come down back in to this balance. So let's just play out from there. There's a low volume node at 65 there. That's the other area that I'd be looking for us to hold and look for responsive buyers to hold us in the upper distribution of yesterday's profile. And it's really a low volume slush zone because that LVN extends down to the 63.90. So you got to wait until we get below the 63.90, and I would not try to enter a trade between 65 and 63.90. Above 65, you can get the rotation back up to the 66.20 microcomposite VPOC. But below that 63.90, I'd be looking for a move down to the former microcomposite. It's a pretty short distance at 63.30, but the real support comes in at the 1161.50. Below that, we could expect a rotation down to the microcomposite from the last 7 days, down at 1157.90, and possible continuation down to the microcomposite value area low at 56.40. Below that, targets are 53.10, 51.10, with 48, 46.20, and 42.60, with the big support line in the sand, in terms of a bigger move down at 1140.60. Anything below that, I think we're going to get a bigger move down to that 1134. If we can get above 68.50, I'd be looking for a test of the microcomposite value area high at 69.70, with resistance coming in at the CLVN at 72. And then targets above that are 76, 79, with the resistance coming in at 1180.10. Remember that 1180.10 was a value area high of the microcomposite on the September contract of that distribution zone that we played off of for quite some time, and I think that the market will go back and test that. If we get above the 1180.10, I think we get back into some price discovery higher, with targets at 83, 85 and a quarter, and the big magnet, which was that 1995.90, has now been shifted down to 1190. Did I say 19? 1195.90 has been shifted down to the 1190.90, with the big target as well up at 1190.80. I don't think we're going to see much more than that. Go over and shift over quickly to gold, and then we'll wrap it up here. So gold is not holding. I'm still running with that short from last Sunday night, and that FUBAR Tech Gap Mr. Sneaky that I posted on Sunday night in the room. And we're not, we were looking if we couldn't hold this the 1258.90. I said look for a move down to the 46.47 area. We came down there. We're not holding. We couldn't hold the 1240 destination today, and what I'm looking for is down to this 1229.40. And I think we'll start seeing some support in this area. We've broken out of this balance, and we're coming back into this area down here, where we found some price acceptance, and I'm looking for a move. As long as we stay below 1240.60, I'm looking for a move down to this 1229.60. I've moved my stop down. My stop is running right now at 56.20. I'm just trying to lock in some profit and give this time to move. If we stay below the 1240.40, and we do come down to this 1290, I'll be moving my stop down on that to 1242.80. But if we don't hold this, I'm looking for a move down to test the other side of the balance in that CLVN at 1218. If we can't hold 1218, I think we're going to get a bigger move down to this 1206.40 and possibly test the 1100s again. But that's what I'm looking at on gold. If they get above the 1240.60, look for a rotation today up to the 1246, 1245 level. But I'm not expecting much bigger move in gold to the upside today. I think if they come down and they find some responsive buyers, will probably come up and close somewhere around 36 to 40. So that's going to wrap it up for today, gang. Lots to go through and digest. I hate rollover, but it's a necessary evil that we have to go through. Just keep it tight. Control your risk. It is Friday. If you're profitable for the week, don't put a lot of risk on the table. Keep it tight and keep it light. As always, trade well, trade safe, and we'll catch you on the flip side.